Yeah, it sure is, Sarah. Thanks for having me. We've been adding risk back into our portfolio in June, which turned out to be a good near-term decision. At this point, I'm not really willing to chase the rally. We're adding in small amounts to some specific names, but I think you're going to get another chance. I don't think we're going to retest the lows, but I do think you're going to get another chance to step in and pick off some of the names that maybe you didn't finish buying in the summer.
What's been your biggest purchase over the last few weeks?
We've been adding to cloud names, and we had done that in June, and then we continued to kind of top them off. And then we've also been adding to consumer discretionary. So a name like Chipotle that has pricing power has demonstrated they can maintain their margins and stands to improve their margins through improved efficiencies. We like that name a lot. It's in our 12 best ideas portfolio, as well as Amazon. I think that's a name that demonstrated and might be good news for Walmart and Target, but they demonstrated that they could execute in this environment with a weakening consumer, or at least a consumer who's shifting from goods to services. And their cloud business, of course, has been really driving the story. And then lastly, we added to Disney.
Disney. All right, well, let's talk about that right now because it is one of the biggest gainers in the Dow today. Investor Dan Loeb taking a new stake in the company, and in a letter to CEO Bob Chapek, urges Disney to spin off its ESPN business and integrate Hulu directly into its Disney Plus streaming platform. Disney issuing a statement that it welcomes the views of all investors. Leslie Picker joins us. Leslie, Loeb previously held a stake in Disney, sold it. Why is he getting back in now? The timing is interesting, just as Disney was sort of on the upswing again.
Yeah, so I was doing some comparisons here, Sarah, because the Disney stake actually dropped off their 13Fs just in the first quarter of 2022. We should get their second quarter 13F filings to see if it's in there this time around as of the deadline tonight. But interestingly enough, they traded it pretty well if you kind of ballpark when they may have entered versus sold out some of it, up roughly, say, 17%. Missed some of the flattening of the stock over the course of the most recent quarter. Again, depending on when they may have gotten back in. And he may have also held beneficial exposure in the form of derivatives and things like that don't have to be disclosed. But in terms of a strategic emphasis here, the first iteration of his stake in Walt Disney, Loeb's stake in Walt Disney, had to do with a couple things that are pretty similar, very, very focused on direct-to-consumer via streaming. He initiated that back in Q2 2020, which was when the whole world was basically falling apart from COVID, and the shares traded down on fears that the closure of theme parks and movie theaters due to COVID would cripple the company. He believed that the company should really double down on direct-to-consumer streaming, emphasized that in a letter in October, while also saying that the company should permanently suspend its $3 billion annual dividend. Now, a lot of those themes are present in this most recent letter that was out today. He reiterated that the dividend suspension should remain. He reiterated this focus on direct-to-consumer, but had more of a strategic focus to it. This idea that Disney should be more strategic with that minority stake in Hulu and potentially spin ESPN, as you mentioned.
Nancy, it's an interesting set of ideas, given what's all the changes happening in the streaming world and people constantly wondering about ESPN ever since it started to post losses a few years ago. What do you make of Loeb's proposal as a shareholder yourself?
Well, I love that it served as a catalyst, Sarah. This was a stock that we were arguing about internally when it was threatening to break below 100. Great company, but there was nothing really going right in the market in terms of looking at the businesses. So when the streaming numbers came out, I think that was an opportune time for him to say, hey, here we are, we're back again. I'm not really crazy about the spinning out ESPN idea, though I get it. I understand why he thinks that would be important. But as a shareholder, I'd like to see it stay intact. I would also like to see them reinstate the dividend, which Chapek has promised to do. But I think what Loeb has done is lit a fire. This was a management team that seemed to me, I know others disagree with me, but seemed to me to be adrift and got distracted with all the issues in Florida. And I want to see them focused on growing the business. We know consumers are returning to services over goods, and this is a great way to play a resilient consumer that's going out and spending money.
Well, it certainly represents a new test for Mr. Chapek after the Florida debacle and COVID. Yes. Now he's got an activist investor to contend with. Leslie, thank you very much.